Good day guys, Andrew here with your update. Today is March the 22nd, 2012. And what I'm going to be talking to you today is about the Nasdaq and silver. Now if we look at the Nasdaq, as I stated in my last video, I think we're doing a 5-wave Elliott wave impulsive structure. So we have the 1, a 2, a 3, a 4, a 5. And to prove that, if we draw a Fibonacci line from here to here, the length of wave 1, we can see that wave 2, which ended around right here, retraced 38.2%. And if we flip that around and do the inverse, it'll be 61.8%. And so according to our little book right here, it states that wave 2 can either retrace 50% of wave 1 or 62% of wave 1. So that's exactly what we got. We got 61.8% right here, after converting it inversely. So if we take this, and I'm just going to duplicate this, I'm not going to change any numbers. If we bring this up here where wave 3 ended, and then I'm going to delete the previous trend line, and remember I haven't changed any numbers. We can see that from wave 3, from 2 to 3, it just has to breach, it has to be 162% longer than wave 1. And so if you look at our handy dandy book right here, it states that wave 3 can either be 1.62 times the length of wave 1, this or that. But normally, there's different Fibonacci relations within wave 3. And so what I observed was that from the bottom of wave 3 to the top, we went all the way up to 200% on the Fibonacci scale, from here all the way to here, and it fit perfectly. And so we have confirmation that this is a wave 3 because it breached this line right here, 161.8%, and then it went a notch higher. And so when it went to 200%, that's when we knew that that was the end of the wave. And then for wave 4, as we can see, it retraced all the way down back to the 161.8% from the 200. And so if we subtract 200 minus 161.8, we can see that we got a 38.2% retracement from 3 to 4. And according to our book right here, it states that wave 4 is related to wave 3 by one of the followings. Wave 4 can either equal 24% of wave 3, 38% of wave 3, or 50% of wave 3. And we got 38.2. So we hit the Fibonacci level. And so since we did that, that confirms that that was a 4. Now I'm just going to duplicate this one more time, and then from the beginning of 4 to the end, I'm going to confirm that we have a wave 5 in sequence. And of course, I'm not changing any numbers now. And I project that the 5th wave is going to go at least 100%. And the reason for that is because if we look at our handy dandy book again, it states that wave 5 has two different relationships, and wave 5 could equal wave 1, or it can go up to 1.62% of wave 1, or 2.62% of wave 1. But this is very rare. You never see this happen except for commodities, and even for commodities that's super rare. So we're looking at one of these two levels. And so when we look at the length of wave 1, that would bring us to right here. If not, and if we do decide to go a Fibonacci line higher, then we would go to 123.6%, which will bring us to this trend line. And I want to emphasize on this trend line real quick, because if you look at the monthly chart, we can see that at these levels, once we hit this line right here, this red line, we can see that we're going to be going to the tip of this trend line. And I don't think it's going to go that high. I really don't. I think what's going to end up happening is that we're going to probably go up to 100%. We're probably going to have a retracement back to these levels right here, to these levels where we could find resistance. So we're going to have a A3 going down, a B3, A3 right here that started with the fifth wave, a B3 followed by a C5 going back up again, and that's when we should hit the trend line, and then a serious reversal going forward. And so keep your eye out on this level right here, 100%. I repeat, 100% is when you want to go short. Or if you're someone like me, I like to wait for confirmation. And so the way I do it is that if we connect the bottom of wave 3 and then connect it with the bottom of wave 4 and draw the line, I think that once we drop below this line, this rally is over and we should see a huge pullback all the way to at least right here. And so that's what I'm going to be doing. I'm going to wait for either 100% and maybe invest a little bit, or I might just wait for confirmation that we get below this trend line. There could be a little bounce before we see a huge downturn. I don't know. But once we breach this green line right here, it's basically telling us that this run is over and a correction is in place. And so what I'm going to currently do, and again, I don't give any financial advice, I only tell you what I do, is that I have my eye on this stock right here. It's called SQQQ, and it's a triple leverage. And so if the Nasdaq goes up, let's say 1% or down 1%, the stock goes up 3% or down 3%. And so, as I stated, if you look at it backwards, this is where I think the SQQQ stock is going to head back up once we hit the resistance line. And that's where you want to get in. And I still think we have a little bit more downside potential on the SQQQ. And so the levels that I'm looking at, again, would be I got to draw this Fibonacci line again from the top of here to the bottom of there. We duplicate that, we bring this up here, we delete the first trend line. I believe that we should see a reversal at this level right here, 2,813. If not, we go one Fibonacci line higher, which will bring us to this trend line. And be very careful. Be very careful. Once it hits this trend line, I highly advise you to get out of the market. We might just hover around this trend line for a little bit and then bam, or we're gonna go down. We're gonna go down. If we look at the charts, if we look at the month chart, it's happened quite a lot of times. We hugged this line right here, flash crash, and this was back in 08 when the housing bubble popped. Then we went back up again, and then during the debt ceiling debate, this happened, a flash crash. So it might hit the trend line and it might hover above it a little bit, but eventually, if we draw a line from here, the risk reward ratio is not good, because you could lose up to this much. Same with this right here, could lose about this much. So I highly advise getting out of the markets once we hit this trend line. But who knows, there's more QE, it may breach this trend line and create a new trend line. But I doubt that's going to happen. And so for the fifth wave, I think what's happening is that we have a subdivided 3, it's probably going to go down a little bit more, may even touch this trend line, and then we should have one more final pop going forward, which should complete the fifth wave. If not, we go up another Fibonacci line, see if it can breach this trend line, and then if it doesn't breach that, then we just go to 161.8%, which will create a whole new trend line. But I don't think that's going to happen. I'm sticking with my feeling that it's going to go either 100% or 123%. So that's what I'm currently looking at. So that's that for the Nasdaq. Now moving on to silver. Now moving on for silver. As I stated in my last video, I think silver is doing a head and shoulders rotation. And so if we look at what a head and shoulder is, here we go, head and shoulders. Alright, let's see if we get a picture here. Oh, we might not even get a picture. Okay, yeah. What's this? Alright, let me see if I can get a picture to show you guys what a head and shoulder is. Alright, so there we go, a head and shoulder. So we have a head, two shoulders, this is the neckline, and then a pop of, both shoulders. Now, keeping this in mind, if we look at what's happening with silver, I think that this is the head, this is probably the neckline right here, and this is the right shoulder and the left shoulder. Left shoulder, right shoulder. And so I'll be very careful with silver. I'm not going to short it right now, even though I think it's going to go down. And the reason why I'm doing this is because if I'm wrong, then you can lose a lot of money and it'll take a long time to recover. You have to recover your losses if you short it. I don't think silver is going to go back down to 31.55 if it goes up anytime soon. But if I'm right, and if this thing does go down, the shoulder may pop. And I think it's going to find resistance right here from the previous low of 26.14 cents. And that's where you want to get in and buy. And that's what I'm waiting for, because I think silver is going to shoot up. I think the reason why people are getting out of silver, and it's also with gold, is because I think people are frightened right now. And the reason for that is because I think they're aware that the stock market is going to crash. And so what normally happens is that commodities crash first, because it's a risk asset. People run from it. And so when commodities crash, expect the crash from the stock market, because that's normally what happened. If you look at the trends back in 08, when oil hit the peak of $144 a barrel, it crashed all the way down to, $40 a barrel? And then the stock market just followed. And so I think that, we have a head and shoulders once again, and I think we're going to have a pullback all the way down to these levels. That's your market update today. Thank you for spending the time to view this video, and please stay tuned for next week's update. Thank you and have a good day.